Welcome to the video. I am going to be reviewing Ray Dalio's portfolio. I pulled up the different holdings he had, and I basically put into this portfolio pretty much everything that was above 1% in his holdings. So right now I got about 20 holdings in this fund. It has a dividend yield of 1.40%, and this is the performance. Over 5 years is 23%. Not super high, but this is Ray Dalio has what he calls a all-weather portfolio, and it has 28% in SPDR. So this S&P 500, gold, IVV, and Vanguard emerging markets, a gold share, Alibaba. So I'll put a link to this in the description so that you can look at it. This is actually something I wouldn't invest in just because I would want something with higher returns. But I do like listening to Ray Dalio. He has a really good video on YouTube that I recommend everyone watch. It's called How the Economic Machine Works. It's really eye-opening, and one of the biggest things about it that I find interesting is when he talks about big market cycles, and apparently they happen every 75 to 100 years. I do not know how he came up with that number, because I'm only aware of one big market cycle, and that was the one in 1929. But if it happens every 75 to 100 years, if you add 100 years to the year 1929 when it crashed, that would leave the next big market downturn to be in 2029. So if the market drops 80%, that's pretty significant if it happens in the next 9 years. So that's something to be watchful of. So I basically put together some of the holdings, some of the top holdings in Ray Dalio's portfolio, and I gave a higher percentage for higher growth, because if you look at Alibaba and you pull up the chart, that's 350% over 5 years of growth. So that had a lot. So of course it has a higher percentage in the pie chart I made. 16% in NetEase, 4% in iShares, core S&P 500. So the performance of this fund that I put together based off of Ray Dalio's holdings, over 5 years, it pulls about 38%. So a little bit better than what he has, but what he has is more diversified, because this has 20% in 21% in Alibaba. But this is the chart. I just made it in Google. This is what he has, and let me show a different view. And you can see a lot of the smaller holdings in there that I didn't account for in my M1 Finance, because the percentages are so low. It's like 0.1% for some of them, and this is what I came up with, just basing it off of higher growth and giving a higher percentage of the portfolio to it. So let's see, and I got that his holdings from this site, Hedge Follows, and I confirmed it with other sites. The numbers are pretty consistent. But those are his holdings. It's showing you the percentage that he has in each. 26% in S&P 500. So that's my review of his portfolio. It's super diversified, for the reason that because it doesn't have a lot of growth. It's not something I would invest in. And but if you're looking for a lot of safety and not so much volatility with dependence on one company, like having 20% on one company like Alibaba or something like that. This could be a possibility for you, but completely up to you. Just wanted to review that portfolio